Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 7th, 2011. Now our first position for tonight is going to be in the PowerShares DB Base Metals, the DBB. Now what I like about this particular trade is we're getting some exposure to the base metals without going into the future, to a very volatile futures market and the spot market or the CFDs, because we are seeing a lot of volatility with the equities, the crude oil, the commodities are under pressure. So we've sold off a little bit on this one. I think we've had a little bit of a corrective move lower. However, I think we've got room to extend on these base metals. Now our key level is 2350, followed by 2356 and 2366. You can see that we've closed at 2368 above all three of the Vantage Point predicted moving averages. That's our first positive sign. Our predicted short-term difference, you can see we've had a nice run up here. We've hit overbought territory. The predicted short-term difference is sold off and broke below the zero line, but you can see now it's turning back up. Our predicted medium and long-term differences also still up. Now another signal that I always like to look for here is, again, looking at the medium term, the predicted medium and long-term difference. Now on this you can see the predicted medium-term difference has crossed the trigger line, followed by the predicted MACD, followed by the predicted true strength indicator. We've had a nice move up. Now what we can surmise here though, however, you can see the short-term crossover from Vantage Point warned us we were hitting overbought territory. This was followed by the predicted short-term difference also breaking lower. The market then sold off, not by a lot, by about 50-60 cents, which is not a big deal. So looking at this one, you can see we're now starting to recover. Now our medium and long-term crossovers are still firmly in place. That's one of the reasons I like this particular trade. Picking it up, following the primary trend, and catching it after the retracement is done for the next move up. So in order to fine-tune this entry point, and we can have our stops relatively tight on this trade. We don't have to have again a big stop. I think we can have a fairly reasonable stop on this trade. Now for tomorrow we're looking at 2353, 2376. We've had the Neural Index down for a couple of days. Now we're up for the second day in a row. You can see a little bit of a pattern here too. The Neural Index has gone up 5 days in a row. That's followed by 2 down days. This is perfectly normal. The Neural Index just recently turning from 0 to 1 again. Everything looks good for this to turn positive again. Our predicted, you can see that we were negative, we were starting to turn negative on the short term, negative 11, but then negative 0.6 and now negative 0.4. And you can see that our predicted medium and long-term differences are holding in there. They're still firm and showing an uptrend. So in this particular case, I think I would have my stop down around the 2290 area. And for this one, I think your day traders can be looking at the 2376 area for sure. But your medium and longer term traders, I would be looking at the state of the equities and the crude oil and the US dollar. Metals are certainly something that are in favor right now. I would be targeting at least the 24, somewhere between 24 and 25.50 for a medium to longer term position. So that's our first position for tonight. Now our second position for tonight is going to be in the Forex market, specifically, again, the US-Canadian pair. I always like to mix it up between one equity commodity type trade and one trade in the foreign exchange market, as it's certainly the biggest market out there, doing about 4 trillion a day. Now, looking at the US-Canadian pair, we can identify 3 key levels of support here. The first level of support comes in at 97.80. You can see that we've closed at 97.99. Our second level is 97.63, and our third level is 97.30. Now in a trade like this, whether we're right or whether we're wrong, it's not as important as the fact that the risk to reward ratio is very strong here, because our key support is at 97.30. Our primary trend, as identified by Vantage Point, is to the upside. Now the overall trend, I would not dispute, is clearly to the downside, but our medium-term trend is up. We've had a couple of decent retracements right here, 2 more right there where we broke through the 18-day predicted moving average but immediately recovered. We've had a good strong close today. Now what we can see is that our predicted MACD has been running flat along the trigger, but you can see it's just faintly, it's now breaking off the trigger. Same as the predicted true strength indicator from Vantage Point. However, both are somewhat overbought, but not too bad. So what we're going to do now is we're going to back back this up a little bit. We're going to go into our crossovers. You can see that our short-term crossover is crossed to the upside. Our medium-term crossover is riding flat, and our long-term crossover is breaking up off of the trigger line. So we're a little bit mixed on that medium term. So that gives us a good quick analysis. Now the one thing I like here too, key indicators from Vantage Point, the predicted short, medium, and long-term differences. These have all turned positive, and all three of them are pointing up, and they're at trend ready levels. This suggests that if the equity markets and the commodity markets remain weak, and by commodities I'm referring more to crude oil than I am metals, if they remain weak, then US Canada has a good shot of breaking out of this recent 94.50 to 98.50 range and push potentially back towards the parity mark. That's not going to be an easy task, respecting the state of the US dollar. But remember, this is not in foreign exchange trading. It's not always about the weakness in the US dollar. It's about weakness and strength in equities, commodities, futures, treasuries. All of these things play in, and that's the basis of intermarket technical analysis. And looking at this, you can see that the state of the equity market is clearly not looking good, and crude oil looks about the same. So if in this trade on US Canada, the two things you want to be watching specifically are the crude oil contracts and the equities. If they continue to move lower, the US Canadian pair will continue to move higher. So now that we've had a quick look at that, let's see what Vantage Point is saying for the daily report here. The daily report also pivotal in assisting with an entry point for these positions. Now again, you can see we've had a close 97.51, 97.74 and 97.99. So we have strong. We continue to have a higher close here. So for tomorrow, we're looking at 97.58, 98.37. 97.58 is a reasonable entry point. I'm going to use about an 80 to 100 point stop loss. I would prefer to have it down in the 96.50 area, just to allow for market volatility. Things are very choppy in there. And then my initial target for a day trader would be around this 98.37 area. But again, if you're watching the crude oil and the equities in real time and they continue to push lower, we should easily be able to hit the 99 mark on this pair. But on the flip side of that, if the equities and the commodities begin to rally, then US CAD will move lower very, very quickly. So those are the market positions for June the 7th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.